Hello, everyone. Welcome to the third episode of JustDario Cigar Time. So for today, I actually would like to talk about my personal investment, but not, of course, to suggest you to follow me or whatever. But as you know, this week and regularly now, I am openly disclosing what I hold in effort to be completely transparent and show coherence between what I write, what I post, what I effectively do. Because frankly speaking, nowadays there are so many people out there that post charts, whatever, like they run Telegram channel. Effectively, they give investment advice without a license, so they might have issues in the future. But the truth is that they do that, so they sell that. So that's their business. So their business actually is not investing, is selling those kind of, elements, selling the type of information. And the real point is, if they were really as successful, as good as they claim or whatever, why they don't simply invest themselves? For why are they charging a fee, So, and I tell you, the answer is that most of the times, the people, pretending to run a business, actually they don't do that. And maybe a lot of people also fail to grasp, in particular nowadays, the difference between theory and practice. A lot of people say in theory that they would do whatever that they project and so on. In reality, when you're doing them in practice, things are very different. Like to manage a portfolio, to manage your finances, your daily life, and with a target of capital preservation, it goes above and beyond what is just like posting a trade idea or a chart or a technical analysis or whatever. So what I want to do today is tell you the rationale behind what I do, and I hope it serves everyone for guidance. Help you to create a framework for yourself to understand how to digest all the information you see around, and then do the decisions that are good for you, not decisions that you are brainwashed to believe that might be good for you. So let me start with cash. So as I disclosed in my post, I hold at the moment 20% of my holdings are in cash, right? So why cash? Cash is because, let's be honest, you need to handle your daily life, okay? But there is a difference in cash, okay? As I disclosed, I own T-bills and dollar, okay? So let me stress this point a lot. When people say I have cash in a bank, that cash is not under your name. It doesn't belong to you. What do you have is a deposit in a bank, but the cash is on the name of the bank. Now, it is not very safe to hold an amount of cash beyond what is being insured by all the public scheme around the world, right? Why? Very simple. If a bank goes in trouble and is not bailed out, then you're actually at risk of losing your hard-earned money, and no one wants to be in that situation at all. People nowadays tend to be, oh, it's not going to happen, they bail out everyone or whatever. But at some point, there is always a moment in which comes to a situation that you might end up in that very end of the risk curve, and you get struck by that light bolt and it damages you. So why to take the risk whatsoever if there is a perfectly fine alternative that is T-bills? What's the difference between T-bills and having deposits in a bank? That T-bills are a security, and if you open a custody account under your name or in other forms, this is not the only one, but the T-bills are securities on your name. So the bank can do whatever they want, but if they go belly up, those securities are segregated under your name, and no one can take it away from them. Right? So furthermore, T-bills are, as I explained many times in my post, are better than cash. Okay, T-bills are the pristine collateral for everything, right? So holding T-bills that at the moment they yield a very chunky interest rate. Like, why even bother? Okay. So why I hold 20% of cash? And by the way, this proportion is 20% now because the value of everything else increased. So, but as I explained in my article, like before, I don't own any stocks whatsoever at the moment. And even if everyone is so fixated that stocks are the only investment in the market, whatever, that's where the money is or whatever, I tell you, that's complete bullshit. Stocks, as a matter of fact, are one of the asset classes and are not the biggest one by far. They are the one that gets the most attention, is sometimes the sexiest and whatever, but there are so many better opportunities out there from a risk-reward perspective that why do I need to stay in a market where things do not make sense whatsoever? Why do I need to put myself at risk? But on the contrary, I'm stashing cash. Why? Because where do you really make money? You don't make money like trading the charts, trying to be in and out and whatever. Who is the only one that makes money when you trade and do things like that, whatever? Is the broker. The broker makes the fee. The market maker makes his spread. They're happy. They make the real money. You may build some gains on paper or stuff like that, but I tell you what, when real shit is the fan, you will be one left on the hook because you're the one in that kind of like risky situation while they're out, they're in cash. So when do you make the really life-changing game? You really made the life-changing game when nobody wants to touch stocks whatsoever. That did happen in the aftermath of the 2000 crash. That happened in the aftermath of 2008. It briefly happened in 2020, but they stepped in immediately to pump everything back because there were election banks were already starting like to fold and whatever. It was a very brief moment. It actually didn't really flash out. There wasn't that moment whatsoever. So people say, oh, if you bought Amazon at 10,000 US, now you would have 30 million. If you bought Google at 10,000 US and when they went IPO, now you have this money, whatever. Yes. So you need to put in yourself in the situation of doing that, because everyone is good at saying things with the benefit of a hindsight. But as I said before, there is difference between theory and practice, right? So you need to be very disciplined and put yourself in a situation to catch real opportunity when they come, not just to follow the crowd. I fall into this herd behavior, and then, in the newspapers you read, oh, this company that traded at a penny at some point, in reality, it was a great business. And frankly, I'll tell you one thing, when everything goes down to the toilet, it's not that difficult to pick up diamonds from the rubble. Why? Simply because those companies, they remain in operations. So if you do your homework and you keep an eye on the market, you have like a short list of very good companies that maybe right now are incredibly overvalued. But if their price becomes lower than their fundamental value, then it's a buy. When you start talking about price and you never talk about value anymore, that is when the problem comes. And that's what people don't understand nowadays in this crazy market where everything is about price. But price is not value. They are a very different thing. So let's move on to the second part of my portfolio, inflation. So right now, we are in an incredible inflationary time. I keep seeing like all these people, like left and right, they post the chart from the BLS. They say, oh, inflation in UK is now 2%, inflation in US is now 2.5%, whatever. That's complete crap. Just buy a ticket, go there, see by yourself. Go in January, then go in June, then go in December. Travel to the same place in the major market like once a year every time and go check by yourself. Is that real inflation level? Of course not. And people are not blind. They are really seeing their purchasing power evaporating. So that's why it's really important in this market, in this historical period, to protect yourself from inflation. Now, my stance here is very simple. As you know, I have gold and silver, but for a similar rationale that I don't have deposits that match deposits with the bank, but I have TBS because I want to be under my name. I'm stacking gold and silver physical. Okay. The physical gold and silver, yes, might be a bit annoying, like to store, to protect, whatever. But as a matter of fact, is there and no one, can come and wipe it out with the stroke of a pen, right? So, and I started a long time ago, as I said in a post, like my grandma, she came out from war, and she always told me, no matter what, gold and silver, they will always keep their value. Gold is better, but what's the difference between gold and silver? Is that silver you can move around in smaller amount. Gold, in particular, if it appreciates a lot in value, it's harder to move around. So it's better to always keep a balance for the two. I know it sounds very simplistic, but she's been constantly right through the year. Yes, the price in the market goes up and down, but, check how many gold bars you needed to buy an apartment today in 2013, 2005, in 1970. And you will discover that the amount remain roughly similar in developed economies. Of course, it changed in economies that came out from emerging market and they became like stronger economies and so on. But we are talking about rationally in a developed economy, right? Because the dynamic in an emerging market economy are a bit different. So we are talking about capital preservation, right? So right now, when you see like, the price of gold going up, down, what people say, it went down a lot after 2008. And I'm like, so what? Okay. I'm not there to trade it and to selling, whatever. It's a store of value that if the conditions come at a certain point that people stop like devaluating their currency, racking up on them and whatnot, and then there might be better value opportunities to consider a shift, then I might consider. But we're not in the case. And why we're not in the case? Because the government are piling on debt like crazily. So you have limited supply assets on one side. Okay, so imagine a ratio. On the denominator, you have a limited supply asset. It can be gold and silver, whatever. And on the numerator, you have the amount of money that is being printed out of thin air. Okay, so effectively, that's your edge against the devaluation of fiat currency, like it or not. And then people are like, oh, but gold, why gold? I mean, guys, gold and silver have been currency since the past 2,000 years. And I tell you, beyond our lifetime, they will remain currency because it's so intrinsic into the human being that gold and silver are currency because they can be measured, they are immutable, limited supply, and so on, that in our lifetimes things are not going to change. Okay? So, and here I come talk about Bitcoin, why I hold Bitcoin as an inflation hedge. I mean, Bitcoin is something that I'm very honest, I didn't understand before at all. I'm like, what's this blockchain thing? Like, it's on a computer. What the hell? But as a matter of fact, honestly, like it or not, if you write down the characteristic of Bitcoin on a paper, on the left side of a paper, you draw a line, and on the right side of a paper, you write down the characteristics of gold. It's exactly the same. It's exactly the same. With difference, the only difference intrinsic is that one has been there for 2,000 years, and the other is effectively what is the evolution of the human being into the digital age, right? So it's not about like, oh, the technology, whatever. My logic here is very simple. And again, number of Bitcoin is fixed. The supply is limited. So the denominator, you have the number of Bitcoin, and the denominator, you have the amount of money printed out of thin air. Very simple. So that's why I hold it. And frankly speaking, I will hold it with the same rationale I hold gold and silver. And then why I hold oil. I have an exposure on oil. This, unfortunately, I have to do it through an ETF because I cannot like stash oil barrels in at home or in a vault. Okay. So oil, you like it or not, is everywhere in society. Not only gasoline, whatever, but it's in like plastic, even like they use oil to refine sugar and so on. Okay. So when in 2020 oil went negative, actually I didn't buy at that time, to be honest, to hedge against inflation. Okay. That's a very, very good example of market distortion that you can literally take advantage of. The price of oil went negative, okay, because like we are living in a hyper financialized financial system where there is way more supply of derivative than it was very supply of commodity. So what happened in that case is that oil crashed like to -20. Like, of course, it didn't make sense. So I'm like, it's a no-brainer. And I bought quite a lot of exposure at that time. And people were like putting like all these narratives and articles on oil that the price will like remain so low for so long. Like COVID will be like a massive cataclysm or whatever. But again, like all these people, they fail to recognize how oil was so like a structural part of society, of everything that we do. That yes, we would have had some price hiccups due to COVID, but as a matter of fact, everything recovers. Like how many times through history there have been like these pandemics? That was not the first one. There's so many. Like every 100 or so year there is one. And you know, life goes on. Human beings, they want to move along, keep living. So all those catastrophic and Eisen thing, it didn't make any sense at all. And then when they started like to print all that much more, I was like, here we go. So I know oil is not performing that well lately, blah, blah, blah. You know why? I explained it many times. Like oil effectively has been pegged, since the US government started to trade SPR in the market, and then when they started to run out of them, since they couldn't crush the oil low enough, there is like a strong complex of derivatives and some position that are making sure that the oil price stay in check. But you know what? You cannot do these things forever. It might take years. It might happen all of a sudden. Who knows? But I'm very comfortable in my position, and frankly speaking, I'm quite sure of the fact that oil price is going to be much higher here from now as another result of inflation. And furthermore, Middle Eastern countries, they are running a strong deficit right now. So they wouldn't withstand that type of low oil price for that long, right? So things will change at some point, and I'm very comfortable in that position. It doesn't bother me because I know it's going to protect me from the real inflation, from the real life, okay? Let's move on to the ultra deep value part of my portfolio that now is 25% because they increased in value so much. Before they were not that much. And this is another thing I explained many times, like, where is real money is not to trade, to buy, to make momentum or whatever, this kind of thing. It's not for me anymore. Like, I was doing it when I found like great opportunity. I never traded in and out the trade or whatever. Like, just go at the casino if you like doing that. There are better odds to make money, frankly speaking. Everyone knows he's a winner because everything goes up. But this market has been lasting for so long. But again, the moment it stops, there are going to be so many people burned. And I've seen this so many times already. And, why do I need to be exposed to that risk reward? So, ultra deep value opportunity right now. I explained this. I published an article last December about how to analyze crypto companies. People say, oh, crypto is all bullshit, whatever, and so on and so forth. You know what? Go back to check what was happening during the dot-com bubble. It's true. Maybe 90% of it will go away, fine. But the 10% that left after the dot-com bubble, it became the mega cap companies of today. So behind crypto project, there are real people. There are people with families. There are people that need a salary to get at the end of the month and so on. There are people that really want to try to build something. Sometimes it doesn't make sense, but sometimes they're very good ideas. I mean, in crypto, I've been there since the beginning because I have to build the project myself, and I strongly believe in it. And I increased my positions over time because I wasn't part of the inner team, no co-founder or anything, but I can really see the demand. I can quantify it, and I know where things are going because RWA, like it or not, is gonna be a reality, and it's gonna go mainstream at some point. And these things nowadays, in particular in the area or like where everything is fast, are gonna like increase in value that much that by the time you figure that out, it's gonna be that late. For Lush, I explained the rationale already many times, right? I mean, just these things similar to the internet era. People at that time were stuck like using landlines, using fax and whatever. They were not understanding things potential. But the very few people that did, they realized, and they waited the right moment to get in and stay. So I read this book, AI 2041, is a 10 chapter, is a bit long, from Kai Fu. That Kai Fu is like AI engineering before AI went mainstream. Okay, so the real people that work seriously on AI. And he explains how the future is going to look like. And I tell you, I am a big fan of Jules Verne. I'm a big fan of similar writers. I mean, Jules Verne imagined submarines even before they were on the back of the mind of people. So technological innovation comes from human imagination and need. And having people right at the core of the business where the evolution happens that they really understand it. I'm not a programmer, I don't understand. But he made this book for people to understand it. And there is a part that is fiction that describes the reality, and then there is a part of the chapter that is technological. So that's why my rationale investing, not because I truly believe it can be an incredible successful business. The team is strong, the team develops, and it makes revenues. Check how many startup projects are there that make real revenues, and they can scale up revenues without bloating their costs or whatever. So that's my rationale there. And very similar for NKI, really. NKI, also because what people do not understand about ChatGPT, Llama, whatever, is that in order for AI to be powerful, the models need to be allowed to train themselves unconstrained. And that's what NKI does. And that's what ChatGPT, Llama, whatever, they don't do at the moment. Okay, they might have a huge data set, but as you can see, once, at some point there were people like asking questions like, if you ask a question about Trump, it doesn't show up because it's censored. As if you ask a question about Kamala, it answered it. So that means that it is a constraint in the model, and it's not going to bode that well for them. So furthermore, there's going to be consolidation support. Like all this model, like the barrier of entry is quite low. What is important is these are effectively the rails on application that can be built. And so far, not that many applications can be built up, like that can really create value on the stuff. But NKI see that opportunity. And now let's get to the last part of my portfolio. So the asymmetric part. First of all, let me tell you what asymmetric means. Asymmetric is the type of investment in which you risk very little for potentially gaining a lot. The most famous and most popular asymmetric investments are options, okay? So options were meant to be, and derivatives in general, like risk hedges, but then in the evolution of things, they became investments of their own, right? So you can replicate a stock just buying a call option and shorting a put option. You're effectively like replicating a stock pattern, right? So effectively, you printed a stock out of thin air. So you see how can things like take shape. But there are so many types of asymmetric investments out there. Like art, for example, can be a asymmetric investment. You buy like a scribble from an unknown artist, and then that unknown artist becomes, I don't know, the next Van Gogh, and you make a fortune, right? So in this perspective, actually, I have to say that I have to attend to the last thing, because let me be clear, meme coin is something that I couldn't stand before, like zero. I was like, this is like irrational exuberance at its best and whatever and so on. So stayed away from it no matter what. Yeah, Dogecoin, like worth 10 billion, whatever. Not for me really. I don't touch something I really do not understand. I don't believe it. But then they issued the Jenny token. Feel free to go and listen to their AMA to read the material and so on. And that made me understand that, okay, maybe 99% is completely garbage. Maybe scams or whatever. Might just people that just want to trade for the sake of trading on this chart and thing. But 1% actually, there might be something. So effectively, this Jenny token, and this is very important when you do things in life, in investments and everything, always remain open-minded. Don't be narrow-minded. Don't say this doesn't make sense. This is a mistake I did so many times in the past. I lost so many opportunities that like came under my nose and was so frustrated after that. Be always open-minded. Just look into something. Maybe if you don't like it, you don't understand, you don't believe it, or it's garbage, you just don't do it. But at least be curious. Try to understand. So with this journey talk, we understand that effectively these memes can be potentially an instrument. In that case, it became effectively a marketing instrument to cater to a specific audience that doesn't care about utility, that doesn't care about like companies building and whatever, but effectively they see value into a meme coin that effectively represents something. And this is this AI model that is active on social already. So it's effectively like marketing, advertisement, and it's not that very different from brands. Okay, yes, of course they may not have like a real value, whatever, blah blah blah. But you know what? When people tell me these things like this, I'll give you a very basic example. Say people tell me, "Oh, Bitcoin has zero value and whatever." I'm like, okay, you tell me that, sure. That's one thing. I give you a Bitcoin now. You give me 5,000 US. Would you do that? No single person replied, "No, I wouldn't do that." Of course, because then they contradict themselves. It means they have value. They can take that Bitcoin and the market. So this is the countersense. So that opened my mind to something. And then I gave it a small punt into it. But then, I disclosed that in my holdings. So, thanks to my followers, other people started to come to me with ideas and things. And remember, I might not reply to every single comment or whatever, but I do my best to read them. And when I ask for suggestion and things, I really read through the comment. And then basically one of my followers reached out to me and said, "Oh, Dario, I'm surprised, you're into me, whatever. I would never expect to you. But I can, maybe you should look into this." And he gave me this link to Raga and send me the material. And then, so let me just give you a brief explanation of what this is. Okay, so Raga sounds crazy, right? It's a meme coin that tells people they're gonna get rugged. They're gonna lose all their money. I'm like, shit, why people should buy this? It's fucking insane. But then there is a catch. The team behind Raga is telling them, you will lose only your money only when Raga achieves $1 billion on market cap. Wait, hold on a second. What does it mean? So effectively, what's happening here? Let me take a step back. Interactive Brokers a few weeks ago announced that you can bet on the outcome of US election now. Crazy, right? It's betting market. But what is that effectively? So that's what is called an event option. So effectively you're buying an option, okay, out of which the probabilities and metrics and so on can to a certain extent be quantified. And if the odds are in your favor, there can be value into that. Okay, there's no difference here if you think about it. Eventually, people that are into this meme token, they're effectively betting on an event. Okay, actually on two events. The first one is that it truly reaches $1 billion, and the second one is that when it reaches $1 billion, the team behind it rugs everyone and they lose everything, right? So follow me here very closely. What are the metrics that you need to calculate an option price? The time, the underlying, the strike, and the interest rates. Okay, so here is more simplistic. Here we have an underlying that is not straightforward, but it's effectively the team itself, right? Will they rug or not? That's the underlying. We have a strike. It's $1 billion market cap. The time, there is not a fixed maturity, but is open maturity. Okay. Although the closer you become, the more you can start narrowing the window. The close goes to $1 billion, more start narrowing the window. And then effectively you have the demand for it, right? Because there is this market, okay? And people might not like it, they don't understand it, whatever, okay? But effectively there is a bid offer for this, right? So you can run a model and try to price it. And what you come up with is that effectively in a project like this, paradoxically speaking, people buy it with already being mentally prepared to lose everything, okay? And that's not very different from an option. But then, playing psychological and human behavioral biases, the more people buy something that's small, the more, of course, it becomes a self-fulfilling theory, the more it increases in value, nominally speaking, okay? The more people eventually will start to believe it goes to that $1 billion, right? But then what happens when the moment it goes close to $1 billion, then people will start to trade the event they get drugged or not. So it's almost a digital option, right? And there are two scenarios. If the team drugs, who is inside at that time, they lose everything, but actually they will lose what they will already be mentally prepared to lose, right? Because they know in advance they will be wrecked. However, if many chance the rug doesn't happen, then we enter in the realm of game theory and behavioral finance, in which people will be like, oh, maybe the threshold is higher. Maybe it wasn't a rug to begin with. That is a meme at the end. Okay? So imagine this situation in which, I don't know, it gets to $1 billion and then people start trading this. And the team comes and say, oh, you know what? We like you guys. The community is great. We're having so much fun. We're going to rug you when it goes to $2 billion. What do you expect is going to happen? So now people know how to price this, know how this behaves. It will go quicker to $2 billion, right? Because then they have an historical pattern they can backtest things. I apologize if this sounds complex. I'm doing my best to keep it very simple. In reality, before jumping into this, I draft a very clear mathematical formula. And pricing model, I ended up seeing that this is effectively has value. So, because, as I said, we live in a hyper-financialized world where everything now is digitalized, it can be quick, and there is effectively demand for some sort of things that might not be in the classical theory. But then, if you are open-minded, you use option valuation. In reality, what you should use in this case is real option valuation. That is quite different. If you're not familiar with it, I suggest you to check. And I was like, you know what? These things, I see something into it. It's something that I can quantify. It's still something that, it kind of like makes me feel uncomfortable because I'm like, these things out of my mind. But as I told you, I'm a deep value investor. And when I see value in something, even if, I might not see deeply into it or whatever, you know what? I missed opportunities in the past when I stumbled upon things I didn't understand, and then they ended up paying out, and then I ended up understanding it. These times, I actually build an understanding on it. I can quantify it. Maybe I don't fully understand. Of course, there are always like blind spots or whatever, but you know what? It makes sense. It's not really my field. I'm gonna put something very small, and I'm not gonna look into it because I don't trade whatever. Like, who cares? But if it really plays out, wow, bingo, right? So that's the rationale. I'm very transparent about this. To conclude, I have some private investments of myself, of course, and this I explained it like a long time ago. Why is it important to invest in companies, invest in people that build something that lasts, that gives job to people and whatever. That actually is the perfect edge of inflation. If you look at the Weimar Republic, those that were effectively edged from inflation were all those like entrepreneurs that eventually can adjust their prices, and then their purchasing power for their goods that they were selling, and so the profits that they get out of it remained fairly stable through time till everything normalized. So they had a business, and actually they became incredibly wealthy, because that's what inflation creates. Inflation, unfortunately, is a big wealth inequality pitch. And all those people that now are trying to say, oh, but deflation is so bad for business, whatever. It might be bad for unsustainable business. It might be bad for people with worthless financial assets. It might be bad for people that are stuck with debt. But for hardworking middle-class people that are saver, that want to, they're really like getting out fiat currency for what they do. Like deflation is actually good for them, because it gives them more purchasing power. They can purchase more goods, and actually, if the economy can readjust, and the companies can protect their margins, so their price might be lower, but then they can actually become more efficient, and then it spurs evolution and so on. So this is actually, I know it sounds like very hard to understand, because we keep constantly like force-fed the bullshit that inflation, a small amount of inflation is good. That's crap, okay? The truth is that like very stable prices are potentially the best, okay? I've been many times through history with few times of inflation, and few times of disinflation where actually the middle class came out. Like in the medieval time, there wasn't big disinflation. And then it's where like the first middle class started to come out, and then there was the Renaissance, right? So if you want a real case of this, just look at China, what's happening there now, but not with what all this like Western media are saying. Like, this is exactly what happened. So is prices going down are not necessarily a bad thing. If they go down in a certain way, they can benefit the population, and they ultimately can benefit the economy, that can grow sustainably without simply racking up on debt and buying growth, as is happening in Western countries. So thanks a lot, everyone, for listening to me. I hope you enjoyed all the rationale. It can be helpful to you, to your decision and whatever. And, grateful for everyone that follows me on X. Because there are other audiences, now we are here on YouTube, because it's more convenient for people. And, also because there is an audience that is not on X, I started Instagram account, is JustDario official. So, just, you can follow me wherever you are. It's convenient for you. And hope you enjoyed, and talk next time.